Most businesses fail, but some of them fail faster than others. Here is the list of 8 businesses with the highest risk of failure backed by data. So when you are planning to start one or the purchase, you will be prepared. My name is Eugene Alexiev, and with a decade of experience in IT, now I'm an investor in private and public companies. So please subscribe if you want to see more content like this. Now let's talk why most businesses eventually fail. There are, from my point of view, several reasons for that. So first of all are the weaknesses in the business model. Basically, when you already have the established business and it has been working for some time, something might change just due to technology, due to competitors, due to the changing of customer behaviors, etc., etc. And if you are not adapting quickly, you might lose their competitive edge and eventually be out of the business. Another point is that nowadays there is a global competition. There are 2 solutions for that. So first, you're the leader in the small specific niche and you outpace your competitors. And the second one, you have the small little portion of the huge market, but eventually you are at risk of disrupting by the global competitors like corporations or other huge businesses. Another important factor why most businesses fail is the weak management. There are quite a lot of business models on the market where you need to clearly understand your numbers, fight for every 0.1, 0.5% of the costs in order to be profitable and make a living. And last but not least is the dependence upon the certain customer or the employee. So here is the example. Basically, there are several business models when the long-term relationships with the client are really, really important. This can be in the B2B sales. And if you at some point have the employee who has the long-term relationships with couple or several huge clients of the firm, and this person leaves the company, you have the risk that some of these customers will follow this employee to another company and eventually to your competitors. And this is a really, really important thing to know and think about. So now let's speak about which businesses have the highest risk of failure. And the first are restaurants. So according to the statistics in the United States, almost 70% of such companies will fail in the first or second year. Why is that? Just because most people think that starting the restaurant is really easy and you do not need any specific knowledge of that, but unfortunately they are wrong. In most cases, you need to be high qualitative person for that and not only understand how these processes work from the operational point of view, but also you must know finance, management, strategic planning, etc., etc. So there are quite a lot of things which you need to know. And on the other hand, this particular field is being disrupted by the technology nowadays. So basically, you can go to the DoorDash or other popular marketplace and order the local food straight to your door without going to the specific restaurant or the location. And in terms of the business, this is the huge risk which can lead to the bankruptcy. Next are retail stores. So basically 40% of them also fail in first and second year due to the lack of specific knowledge, increasing competition from the huge retailers, and increasing the share of the online commerce like Shopify stores, marketplaces like Amazon, Walmart, eBay, Etsy, and others. And basically, more and more people just got accustomed to shop online, not going on a specific offline location, at least if they do not familiar with the owner. But anyway, this is the sphere which is been seriously disrupted by the technologies and huge corporations at all. And now you need to fight for 0.5 percentages of cutting costs in order to be profitable there as well. Next, tech startups. Basically, it also applied both for starting the business and the purchasing the existing one, because in most cases, these startups can be easily disrupted. Of course, you can say that you as the venture capitalist can split your money between 100 or 200 investments and hope that one of 200 will bring you the $1 billion. But unfortunately, you need a huge sum for that. And in the beginning, there is a really, really high probability that you will fail. Next are beauty salons. And they also have like 40 to 50% failure rate according to the labor statistics in the US. Basically, the main reason for that is either changing of the consumer behavior and additional amount of capital needed, for example, purchasing the new technologies, the new tools, etc., etc. If you're thinking in terms of investing and purchasing the established beauty salon or other spa business, it can be profitable if there are certain criteria met, but we will also speak about that in the next video. Next are gyms, and I was really surprised to hear that almost 81% of them fail in their second and third year. Why so? Because this is the time when the owner needs to replace their equipment. So basically, it works like that. You start the business, everything is fine. You open the gym, and you have the new fresh equipment, and you charge certain amount of money every month. But what happens is that most customers will pay you in advance for like 6 or 12 months, and some business owners make financial mistake and then just count that they will receive the whole sum of money in the beginning in a specific month. But the real situation is that this sum is split between different months, and in real situation you need quite a lot of customers just to break through. And after this certain period of time, the owner understands that, okay, now I need to replace the equipment. What should I do? I do not have enough money. I barely cut my costs to the specific amount. I barely pay for the rent, for the wages, etc. I do not have any profits yet. And I need to go to the bank. And the bank just looks at the balance sheet of the business and understands that it is negative in cash flow, it doesn't have any assets, and basically decline in the credit. And eventually this leads to the situation when the owner should decrease prices for their monthly fees, and this leads to even more losses and eventually the bankruptcy. Next are transportation and logistic businesses. Almost 60% of them fail in the first and second year. Why is that? This is the same reason as with the gyms. So basically you need high capex investments in that. You need to purchase more equipment, more cars in order to be profitable. You do not make any huge sums of money on the first or second car. You need the entire fleet for that to eventually be profitable. And currently with the launch of Tesla's Cybertruck, other companies' trucks, this industry can be disrupted because you do not need to pay wages to the drivers in order to be competitive. And you can just purchase this car and just send your goods from one location to another. Agricultural, like farms and other products which are connected to this field. Approximately 50% of such small and medium-sized businesses fail in the first and second year. They need the huge investments in the equipment. And there are quite a lot of things which you obviously cannot control. Basically the weather, insects which can just damage your plants, and eventually you will be out of the business. Another point of that is that you need to constantly develop your product line and launch new products. This is the huge risk because you still need the huge investments to launch the line, to prepare the product, to build the MVP, to offer to the market. And you, in most cases, simply do not know how this product will be popularized among the audience and among your customers, whether they like that or not. There are still risks in that. Fashion brands. So basically nowadays, if you have the media presence or you just want to be creative and unique, you can launch your fashion or clothes brands. It's just that simple. But unfortunately, there is a huge competition of that. Unless you can bring the customer acquisition cost down to those numbers that it will be profitable for you to run the brand and scale it, you are at the risk of being disrupted by the low-cost producers like H&M, Zara, Amazon marketplaces, and Chinese suppliers. And that's why there is the really huge risk of failure among such businesses in the first and second year, almost 50%. Eventually, you can combine different business models between each other. Add such things like technology, media to bring the customer acquisition cost way down so you will be profitable and be competitive among other companies. But this is really advanced stuff, and not many people can do that in order to be profitable. Most people simply do not know and simply do not have such knowledge for that. That's why I invest in businesses looking for different opportunities to combine with these models and scaling them to the different level. Hope you enjoyed this video and see you soon.